The journey to homeownership is filled with excitement, but closing costs can be an unexpected hurdle. These fees finalize your mortgage and transfer property ownership, often surprising unprepared buyers. Closing costs cover lender fees, government charges, and title insurance, typically 2 to 5% of the home's price. In Florida, specific taxes and fees are standard, making it crucial to anticipate these expenses. Educating yourself on these costs helps you budget effectively and avoid last-minute surprises. This guide will demystify closing costs, especially for Florida homebuyers, ensuring a smooth transition to homeownership. By understanding each component, you can confidently approach the closing process. When buying a home, it's essential to understand the various financial components involved in the process. One of the first things to distinguish between is the down payment and closing costs. These two elements play crucial roles in the home buying journey. The down payment is your initial equity in the home, which directly reduces the loan amount you need to borrow from the lender. This is a significant upfront cost that buyers need to prepare for. On the other hand, closing costs are fees for various services that facilitate the sale and mortgage process. These costs are separate from the down payment and can sometimes catch buyers off guard. Typically, these closing costs can range from $8,000 to $20,000 for a $400,000 loan. It's important to budget for these additional expenses to avoid any financial strain. These costs cover a variety of fees, including those from the lender, title company, and government, ensuring that the transaction is legitimate and binding. Many buyers tend to focus solely on the down payment, often overlooking these additional expenses. This oversight can lead to unexpected financial challenges. To help with this, lenders provide a loan estimate document that details these costs. This document is crucial for effective budgeting and financial planning. It's important to review this document carefully to avoid any financial surprises down the road. Understanding every detail can save you from potential pitfalls. By understanding these financial components, you ensure that you're fully prepared for the complete cost of homeownership, making the journey smoother and more enjoyable. Lender-related charges form a significant part of closing costs. These costs can often be overwhelming for first-time homebuyers, but understanding them is crucial. Common fees include the loan origination fee, typically 0.5% to 1% of the loan. This fee compensates the lender for processing the loan application and is a standard charge in the industry. Underwriting fees cover the lender's risk assessment, ranging from $500 to $1,200. This fee ensures that the lender evaluates the borrower's ability to repay the loan, which is a critical step in the approval process. Processing fees handle clerical tasks, sometimes listed separately. These tasks include document preparation, verification, and other administrative duties that are essential for loan approval. Discount points can lower your interest rate, costing 1% of the loan per point. Paying for discount points upfront can save you money over the life of the loan by reducing your monthly payments. Other fees include flood certification and tax service fees. Flood certification ensures the property is not in a flood zone, while tax service fees cover the cost of monitoring your property taxes. Review your loan estimate to understand these charges. The loan estimate provides a detailed breakdown of all the costs associated with your loan, helping you to budget effectively. Ask your loan officer to explain each fee for better comparison. This will help you to identify any unnecessary charges and negotiate better terms. This scrutiny helps you make informed decisions about your loan's true cost. Being aware of all the fees involved ensures that there are no surprises at closing. Understanding lender fees ensures you're prepared for the financial commitment. By being informed, you can confidently navigate the home buying process and secure the best possible deal for your new home. Third-party services are crucial for completing a real estate transaction. These services ensure that every aspect of the transaction is handled professionally and accurately, providing peace of mind to both buyers and sellers. The appraisal fee ensures the property's value matches the loan amount. This step is vital as it protects the lender by confirming that the property is worth the investment. Without a proper appraisal, the loan process could face significant hurdles. Credit report fees assess your creditworthiness, a necessary loan step. Lenders rely on these reports to determine the risk of lending to you. A good credit score can lead to better loan terms, while a poor score might require additional steps. Property surveys outline legal boundaries and confirm structures' placement. This ensures that there are no disputes over property lines and that all structures are within the legal limits. It's a crucial step for avoiding future legal issues. Title companies charge settlement fees for handling the closing process. They manage the paperwork and ensure that all legal requirements are met, making the final transaction smooth and efficient. A title search verifies the seller's right to transfer ownership. This step uncovers any potential issues with the title, such as unpaid taxes or legal claims, ensuring that the buyer receives a clear and marketable title. This search ensures a clear title, free of liens or claims. A clear title is essential for the buyer's peace of mind, knowing that there are no hidden surprises that could affect their ownership. Lien searches check for municipal liens or code violations. These searches are important to ensure that there are no outstanding debts or legal issues that could become the buyer's responsibility after the purchase. These fees protect your future interest in the property. By addressing all potential issues upfront, you can move into your new home with confidence, knowing that your investment is secure. Understanding these costs ensures a smooth transaction. Being aware of all the fees involved helps you budget effectively and avoid any last-minute surprises during the closing process. Prepare for these essential services to secure your investment. By planning ahead and understanding each step, you can ensure a successful and stress-free real estate transaction. Title insurance protects against future claims or defects in the title. Lender's title insurance is required based on the loan amount. Owner's title insurance protects your equity, often paid by the seller. Title endorsements offer extra coverage for specific risks. Government charges include recording fees and taxes. Florida's documentary stamp tax and intangible tax are significant. These taxes must be factored into your closing cost budget. Clarify who pays the documentary stamp tax on the deed. Understanding these costs ensures you're prepared for the financial commitment. Protect your investment with title insurance and budget for government levies. Prepaid expenses are part of closing costs, covering future costs. Daily interest accrues from closing until your first mortgage payment. Homeowners insurance is required, with the first year's premium due at closing. Costs vary based on location and coverage choices. Lenders may require an escrow account for taxes and insurance. Initial deposits cover a few months of these expenses. Monthly mortgage payments contribute to this account. This system ensures timely payments, protecting you and the lender. Understanding prepaid expenses and escrow accounts helps manage future costs. Seller credits can help manage closing costs. In a buyer's market, sellers might contribute to your closing costs. This reduces the cash needed at closing, easing financial strain. Limits on seller contributions depend on the loan type. Preparation is key to managing closing costs. Research typical costs in your area and review loan estimates. Compare offers based on interest rates and fees. Review the closing disclosure for final costs. Address discrepancies with your lender immediately. By understanding and preparing for these costs, you can confidently close on your new home.